Hi, my name is Keegan Carl, and today I'm going to talk to you about my future research, which is how crude oil affects the markets. Now, before I get into it, I would like you to ponder something. Think to a time recently when oil prices were extremely low, which might be even as recently as a few weeks ago. How was your spending affected by that? Did you travel less? Did you buy more things that you didn't necessarily need because you had extra money lying around? Now, think to 2011 when the EIA.gov states that oil prices were at an all-time high. What was different? Did you travel less? What did you have to cut out of your personal budget? These are some things to think about when I continue to talk about my presentation. I just want you to realize how important crude oil is to our economy. So the goal of my research is to determine the relationship of crude oil prices and the effect that it has on both the market and the economy. My research will begin with more of a literature review focus, and also focus on current news and technical analysis. This will factor in supply and demand, which will also consist of OPEC and Saudi Arabia. And it will also look at economies that both import oil, export oil, and do both. One quick example of this is that Wani and Barajas found that the stock market growth developed at a higher rate in countries that exported oil rather than imported oil. On top of doing that, I'm also going to do some more technical analysis, just looking at the charts of oil prices and then determining how it affected certain sectors such as energy and also market indices. And that'll just be comparing charts and movements on a day-to-day basis and a year basis. So using my findings in literature review and the news, as well as my regression and technical analysis, I want to be able to verify my hypothesis, which is this, that the market, which is in green, and oil, which is in orange, have a positive relationship, meaning that when one moves in one direction, the other moves in the same direction. And as you can see here, it's not a perfect mirror image, but the general concept here is that when one moves, they both move. So my goal of research is to establish a legitimate relationship between crude oil prices and financial market fluctuations, and to find how economies react to large swings in price. I want this research to develop theories of investment based on crude oil prices for a multitude of uses that will benefit myself and other future investors. Finally, I hope that this will just shed some light in general on the relationship between crude oil prices and market fluctuations. Thank you.